Well, hello, traders and investors. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves what happened today, and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube, son of a channel, L.A. Little. If you haven't subscribed and you want to, just reach up in the right-hand corner and do so. Each time I push content, you'll get a notification. And you're going to want to get those notifications because things are starting to cook now. It's getting a lot more interesting as this market continues to rise. Today you actually, last night we talked about some over and under situations that should lead to some sort of a pullback. It turned out, once we got the volumes in and took a look at them last night, that the volumes were actually heavier yesterday, which said they could have gone back up and tested, and they didn't, which actually is a little bit more negative as a result. But anyway, you didn't have a huge pullback. NDX held up pretty well. That is until after the bell, right, where you came out with some of those earnings and those big cap technology stocks they've been after. Those stocks got hit. 5% on Google, 4% on Microsoft after the bell. That's going to put some pressure on this part of the market. That's the part of the market that's been struggling, if you remember. And usually you want tech to lead, not to drag, and it's been dragging, and so this is going to be an interesting test come tomorrow. You had the small caps trade down today. You had the S&P trade down 50.5%. You've got some weakness, it looks like, in Japan tonight. That's just starting to trade. And the particular thing that I wanted to call your attention to here is that the dollar actually finished sideways. It was a doji today. That was after they tried to push it down. It wasn't a doji. It just finished even. It was after, it was Draghi today, right? And so what happened was the euro, Draghi's going to try to pull the euro down. The euro shoots up intraday, and then by the end of the day, it reversed again. The same thing happened on the dollar, right? The dollar was shooting down and then reversed and closed there. And so now it's going to come down to the Fed and what the Fed wants to do. And the question is this dollar going to continue to try to work its way higher, or is this euro going to turn around and go back the other way? And that's really going to be where the rubber meets the road on these currencies, because the currencies are driving so much of what's happening out here. Whether you're looking at the gold market, the silver market, any of these markets, they're getting moved a lot by the currencies, but that's also true of these other markets like the DAX and so forth. So let's push on. Let's take a look at the charts. Let's start with the S&P 500. So, last night I was talking about the over-unders. You can see the volume a little bit heavier here on the S&P, but then today, even though it was heavier and you got the over-under here, you got that pullback anyway, and I'm really curious to see if they can get some follow-through. And I'd already pointed out to you once before that throughout this whole run up, you've had almost no pullbacks, right? Very little tiny ones. Well, now if you look at this, now you're starting to get some ledges, right? This is when it gets a lot more interesting. You kind of got a ledge right there, and then you tried to build on top of it and do another one on top of that one, and it didn't quite get to the highs. And if you keep drawing them back down the other way, you can see the ledge forming there, and then we can draw one more down to here, and we could actually get the last one. And then you could combine some of those if you wanted to. Now, those ledges, what becomes important on any kind of a sustained move against whatever the direction has been, right? Those ledges become important because what you're going to see is as they come into that area becomes key. And so what's going to happen is it comes back, and in this case, to that swing point high. Is it going to break down and get into the lower ledge, in which case if it can get down there and stay down there, it's going to try to go to the bottom of it. It's like stair steps, right? You go up one, you fall back, you have to work your way back up, or you keep falling down the stairs. So that's going to be the interesting key tomorrow, I suspect, and you're going to really see it over here on the NASDAQ tomorrow. Especially on the NDX, actually. You've got this ledge again. If we talk about ledges, you can see how much weaker this has been, whereas the rest of the market keeps grinding higher. This hasn't been able to do so, and so you've got these ledges that have formed here that, as this market tries to come back in, We're going to see if it gets back into that area, and I suspect tomorrow it's going to really do its best to do exactly that and get back into this lower one. And folks, it's not a lot of room in here. You start breaking these things down, right? It doesn't take a lot to break down to the next one and so forth, right? And they were larger if you look back. They were a little bit larger back here than they have been lately. As a matter of fact, if we tried to draw that one in, it was almost just at that level. Matter of fact, you hardly got to close over that if we look at it that way. So, you know, it's just, we've had this situation where the market has been grinding up, grinding up. Now we're getting to this point. You could draw them in that way. We're getting to this point now where this has stalled and it hasn't been able to get over it. Now you've got the NASDAQ index going to be struggling tomorrow, and we'll see if we really do have some support under here, or if this entire move up is going to see a larger move down finally. And that's since this low, right? Almost no move down since this low is the way it's been. Now, one of the other things I talked about last night is the fact that even though we had these over-unders and I didn't have the volumes to be able to read them, we didn't have it on the sectors, if you remember me talking about that. So if we pop over and take a look at the sectors, and let's pop up, I'll just show you 2 or 3 here. Now they're starting to show the over-unders. Here's the XLB, for example, doing an over-under. If we move over to the financials, which have been really driving this whole move since last week, financials do an over-under. And again, folks, these are over-unders that we could argue that are actually 2 bars. The difference between an over-under and a 2 bar to me is the angle of ascent and the rapid, what kind of appreciation you get. So you got a fairly steep angle here. You got a decent appreciation off of that 2185 up to about, actually lower than that, it's about 2160 or so, up to 23. So you got almost a 10% rise. So an over under here, you could argue, is a 2 bar reversal. And that thing, if that's 2 bar, it's almost guaranteed to go sideways, potentially down on the next bar. And if you move over to some of these others, right, you're seeing the same sort of thing tonight that we saw in the indexes last night. And we saw, and the other thing is really interesting here is you had some huge profit taking, selling, whatever it is, volume expansion, consumer staples just getting slammed, and the utilities, another one just getting slammed. What's going on here, right? These are the safety stocks. If the market's going to fall, why are these going to fall too? Is the money really coming out of these stocks in general? Or we're going to see rotation back to these groups, and I think that's going to be a question you want to try to answer over the next couple of days and the next week or so. Finally, if we move overseas, there you don't see any kind of pause, right? I mean, here we've been talking about 2 bars or over-unders the last couple of days. Well, Australia breaking out on the daily time frame now. Do remember that these overseas charts are a little bit different in that they're coming from longer declines than you see here in our markets, and so these moves up may be nothing more than some sort of a catch-up move. You do have some nice ABCD structures starting to show on some of these. This would be a break of multiple swing point highs here on the Aussie for my friends over in Australia. So that, to me, is something bear watching. You got a nice little structure going to the upside there. If you go, to any of these others, right, they're still not wanting to give it up. Here's India just grinding higher. You got Brazil, even with all the problems down there, just hanging at the highs. If we go over to Hong Kong, same sort of thing, popping up a little bit higher. Remember, Hong Kong is doing the full retest regen, and right now, if they close up here, they're just slightly over it. That high on the low was 21,530, and you got 21,620 right now. So unless Hong Kong gives it up tonight, you're going to get over that bearish retest regen, which would say, hey, the move down is probably over for now, and it's sideways at least for a while. Nikkei also the push there in the topics over the swing point highs here on the daily, on the weekly, doing a retest regen. So again, ABCD structure is just getting over the B point right now. These are going to be interesting to see if they can extend or not. with what looks to be some tough markets here domestically potentially setting up. If we go over to Europe, on the Draghi, you got the reversals. They were down and they reversed back up. Let's see, this was actually a 10,440 and closes just under it. So you actually got an over under, but again, like here yesterday, it's slightly more volume. The DAX, let's see what the CAX looks like, and we'll look at Swiss market as well. Also, exact same pattern, over, back under, more volume, saying that it could go back and test again in the morning. And if we look at the Swiss market, same thing, over, under. They've already had some decent moves, though. I expect that even if they try to push higher in the morning, they're going to get pulled back down. That's the way it's setting up for tomorrow. It looks to me like you're going to have a tough day finally in these markets. Now, if this market really is a bull market, right, in the sense that we're going to new highs and we're going to continue on, this would be a key moment, so to speak, where instead of pulling back on what is bad news in some of these earnings finally, they've all been bad, but they've been sold down so much that they pushed higher. But in the tech stocks, that's not true, right? I mean, if I pull up, let's just pull up one of these. Let's grab Google and look here at the advance that's taking place now off the Feb lows. What were you back there? 700, basically 682. Now you're at you're up 100 points, more than 100 points going in at earnings. That's 15%. Pull it to a weekly and look at it, right? I mean, these stocks have had huge runs. I mean, if you go back on a weekly, look at it for about a year now, right? Just take the lows, 529 up at 804. I mean, these are significant runs, 35, 40%, right? And then you come out and you miss your earnings. That's not a good sign. This thing is going to try to come back down and trade back into these big bars around 700 again, it looks like to me. That's where we're at tonight. Let's see what kind of pressure that puts on the NASDAQ, the NDX, and all the other indexes. And if this bull market wants to continue, it's got a big set of lifting to do tomorrow. And I suspect it's not going to be able to do it. And that's it for tonight. Thanks for joining me. Have a great one. And tell a friend, tell two. I'm LA. This is and was your daily NeoTA wrap. Have a great night. See you next time.